Welcome to Markets Now. I'm Michelle Rook with Brian Grete, Pro Farmer, and we did have a mixed day in the grains, mostly lower in the livestock futures. And Brian, let's start off talking about the corn market. We did see some pressure today. Was that because of the harvest pressure that we normally see this time of year, or because we can't take out that darn $5 resistance area?
Yeah, I think that's the key is taking out $5, and if we get above that, then we probably pick off some buy stops, and that comes into play. Until that happens, though, I don't think the fundamentals are there to push us above that level on a sustained basis, and so the technicals probably mean a little bit more here in the short term.
Yeah, so what would have to change? Is it demand? Is it South American weather? What would be able to push that market finally?
Yeah, any of those factors I think could come into play. I don't necessarily think that either of those will. Maybe it's an outside factor. Maybe it's the soybean market taking a strong leadership role to the upside because soybean fundamentals, at least on the demand side, are better than what they are for corn. And so, any one of those factors could come into play, but we are going to need something. That's for sure in the corn market to get us going.
Yeah, we've been in a pretty narrow trading range, though, haven't we?
Absolutely, and really quiet trading ranges, not only overnight, but during the daytime session as well. And we move a little bit to the upside, and we pull back a little bit, and move a little bit to the upside. And I think that that's the type of grind that we will see as we move forward, not only through the rest of this month, but probably into November as well.
Yeah, but you think the harvest low is in corn?
I do. We're trading more than 20 cents off the lows at the moment. And so I think that it would probably take some sort of a negative external factor to drive us back to those lows and take them out. So with that said, the low was put in September, and we're just going to have to, grind it out and try to work a little bit to the upside, a little bit at a time.
Soybeans to the plus side, that's been a slow grind as well, but we got some help today from demand news, including the NOPA crush figure, right?
Absolutely. Record NOPA crush figure for September. So the first month of the new crop marketing year. And that's a heck of a start and something that the soybean market can kind of put a feather in their cap for, I guess. The exports have picked up seasonally a little bit. We still have the low water issues on the Mississippi River, but we're pushing a lot of soybeans out through the PNW. And so that's critical because this is obviously the key time frame for U.S. soybean exports through the first quarter and a half of the new crop marketing year is really when we need to make hay on the export side. The flip side of that is that Brazil's still actively exporting soybeans, and so that comes as competition in our face.
Yeah, that 74 million bushel export inspection figure today, as you point out, a lot of it going through the PNW because of the river situation, and that will probably continue, you think?
Absolutely. I think that we saw that last year when we had the low water levels on the Mississippi. We find a way. It isn't the easiest way, and sometimes it's a little bit more costly, but we find a way, and that way is through the PNW, especially when they're going into the Asian market and in particular to China.
Soybeans here again. Is the harvest low in, and what's it going to take to close above $13 here in that market?
Yeah, much like corn, I do think that the harvest low is in place. Also, much like corn, I think that it's probably going to be a grind higher of the two markets. I think that soybeans probably has a chance to be more of a leader to the upside, and just because the fundamentals are a little bit better, the exports have started to pick up. Like I mentioned, the crush is obviously strong, and so they have the fundamentals advantage over corn. But I think it'll be a grind higher as we work forward.
Yeah. And we're watching South America. I know El Nino is kind of re-intensifying, but that's a story maybe a little farther down the road, you think?
Yeah, I think it is. It's been slow to establish, and so what we've seen is dryness in central Brazil. That's kind of slowed down the planting pace for soybeans there. It's too wet in far southern Brazil, so very El Nino-like weather, but it is slowing down the planting pace, and that probably is more of an issue or more of a story for corn longer term. Because they're going to get their soybean crop planted. It's probably in all likelihood going to be a record again this year. But any delays in the planting side of soybeans pushes back the soybean harvest, which pushes back the safrinha corn production or corn planting. And that accounts for about 75% of Brazil's corn production overall. So longer term, it's probably more of a corn issue.
And the wheat market, well, we're off of contract lows at least. We're not going up very fast, or we're not going very far. So, what is that market trading right now?
Well, it's primarily trading what corn and soybeans are doing, and I think that if it's going to go to the upside, it probably either takes a geopolitical issue to really put a charge into that market, or it takes leadership from corn and soybeans. To the downside, wheat has shown more than enough willingness to lead on downside days, and that's a market that's just lacking price support and bullish fundamentals at this moment.
Yeah. Cattle market sitting back here today after some early strength. It seems like the funds are kind of more liquidating on strength here as of recent. But, we did have the strong cash trade last week, maybe a little talk of better cash trade again this week. So why did we set back? Was that just some profit taking or some hedge pressure?
Yeah, I think Monday's price action is very indicative of what we'll see throughout the week. We have the cattle on feed report coming up at the end of the week. That's likely to push back cash negotiations, and so we'll see a little bit up and a little bit down. And in all likelihood, we won't go very far throughout the inner days of this week. Probably take until Friday to get some real movement. When we look at it from a longer term fundamental standpoint, the supply side is fully bullish. That numbers continue to decline there, and that will be the case as we move into next year. So that's supportive. We do have some demand concerns, and I think we've seen some of those play out in the wholesale beef market already. Record retail or near record retail prices, and so we'll see how that all plays out. But there's supplies are bullish. Demand, we have concerns, and so that's kind of keeping us in this choppy overall trade.
Yeah. But you've got to be impressed with the fact that we've had all this outside market noise, Brian, and really the market's held together pretty well. I mean, the funds could have headed for the exit door.
Absolutely, and that's the supply side, the bullish supply side of the market coming into play there. So if we didn't have all that outside noise, I think that we would be working to new highs, and I think that at some point we will make a new high in the cattle market. It's just kind of grinding right now and waiting for the opportunity.
Yeah. And the hog market setting back here again, cash and cutout values continue to drop, but you've got December now at such a big discount. When does that catch?
Yeah, so the negative seasonalities as we start to build our slaughter numbers from a just a seasonal standpoint, moving through the fourth quarter, and so that's going to continue to play out and keep the cash and product markets under pressure. But like you mentioned, the big discount in the December contract, I don't think it's overwhelmingly bearish by any means. And if anything, maybe we can surprise a little bit to the upside as we move forward. Because they do have quite a bit of pessimism already built into prices.
Yeah. And just an overall market question about the Middle East conflict, because so far the markets have handled it pretty well. But going forward, if this thing escalates, what would happen or what could happen?
Yeah, so I think that the key is other countries getting involved because Israel and Hamas going against each other. Probably not anything that's going to excite the market, to be honest with you. The marketplace is very used to conflict in the Middle East, and so if Iran, if Syria, if the United States gets involved, then it's a much bigger story. Then it goes obviously expands it and intensifies it, and then it becomes a market factor that probably puts a charge into markets.
Okay, something we'll keep an eye on. Thanks so much for joining us, Brian Grete with Pro Farmer. That is Markets Now.